Hey guys, so this is the Day Traders versus weekly outlook for Sunday, March 15th, 2026. We don't have a lot of earnings today or for the rest of the week, but we do have some news coming in from the economic side. We got to pay attention more to the global geopolitics going on right now. So just take a quick look at the risk disclaimer and we'll go ahead and get started. We're gonna go ahead and switch over to the next screen and we will get started here. So finally got my laptop back and that took so much longer than it was supposed to. So can you guys see my screen?
Yeah,
Okay.
congratulations.
Yeah, this it took so much longer than it was supposed to, man. I
Yeah.
ordered this laptop the beginning of February and it was taking a long time because it was a custom built laptop. And then, once that was established that it was going to take a long time, then the war happened. And I think the war is actually what kind of held things up because
hmm
by that time we hadn't even shipped. And then I didn't know this, but Apple was coming out with a new version of the MacBook. So what ended up happening was instead of them shipping me the one that I paid for, they gave me a upgraded version. So it actually worked out because I got an extra terabyte of storage and I got the new MacBook with the M5 Pro Max processor. So I was gonna have the 4 with 1 terabyte. So if you computer guys or anybody know about computers, I just ate on this one. So
hmm
just I'm just
So that
be
was with same cost?
yeah, I didn't have to pay anything extra. They gave me the new one
Really?
with the extra terabyte of storage and
Wow.
the better processor. So
Yeah.
I'm about to be I'm good. I'm good. I already like it. Like the fact that I can zoom and
hmm
still my
Yeah.
screen not flickering right now. And I actually I think I still got, let me check. No, I had Premiere Pro open too. So like those are all good signs that I'm in a good place right now. I just gotta add in a couple things. Um so yeah, so that's my win for now.
Nice.
Huge win.
hmm
Um Nothing coming up on Monday as far as earnings go. Tuesday, nothing. Nothing big. Lululemon, if that's something you're interested in. General Mills, kind of watch out for that. Watch out for Macy's as far as the retail sector goes. Um, Alibaba is one we want to pay attention to on Thursday. And actually, FedEx is going to be one we want to pay attention to. And the reason why we want to pay attention to FedEx is because with the increase in oil right now, we may possibly see an increase in the amount of what they're charging for consumer shipping. And I've already heard something that they're going to likely be increasing the price for cost of shipping because of what's going on. So uh, the other thing is we want to watch for is we do have the interest rate coming up this week. Um, right now, looking like it's going to stay the same. We got a 99.2% chance that we stay within the 3.75 range, which is the current price target for current price, not price, but current basis point that we are right now. So we likely won't get any updates to the interest rate. And a lot of that has to do with the fact that of the uncertainty right now, like what's going on with the economy, what's going on with the markets due to the tariff situation, whether they're going to uphold the tariffs because the Supreme Court's actually just, at one point they stated that those tariffs were illegal, whether or not they're going to get paid back, and if they get paid back, who they're going to get paid back to, whether it's the consumer in a form of some kind of rebate or refund check, or are they just going to be paying back the companies themselves? We don't know how that's going to work out. And then um, we have some issues with unemployment, not so much that's on the overall, but we just had, I think the last unemployment rate creeped up to 4.5%. So, and that's still within range, but it is starting to tick higher, and that's what something we want to pay attention to. Okay. Um, and
Mhm.
that's going to be on Thursday. We have Alibaba and FedEx that we want to look out for. You about to say something, Anna?
No, no, just say, means got your point.
Okay, okay. And then Friday, nothing pretty much on tap. So on the calendar, we have Empire Manufacturing Index at 8:30 on Monday. That's a red folder, but we might want to pay attention to that too. On Tuesday, pending home sales, definitely need to pay attention to this. Again, not so much for a trade setup, but just pay attention to this for your own personal uh, stake. Then we got core PPI at 8:30, which is going to be the bigger of the news this week, the biggest of the news this week outside of the FOMC. Um, and the Fed rate. So you can see we at 3.75 right now, and we probably be staying the same at the 3.75. What we'll need to look out for is even though we don't get a rate change, what does Powell say during the meeting, the 2:30 press conference? That's going to probably be what we want to keep an eye out for. So if you do get in a trade on Wednesday, try to get in it early, get it in and get out. Maybe, I don't usually wait for this 2 o'clock trading to take place. I'm usually out by then. And just one other note about the 8:30, we have the PPI news, and P PP core PPI is probably gonna mirror what we had on the CPI release. We actually came in kind of flat on CPI, not much of a change. So I'm expecting this to pretty much come in at or around expectation on PPI, but we'll just need to watch out for that. And then Thursday, we have unemployment claims, which was last week was 213. The forecast is 215, and it'll probably be around the same. But I did see a few headlines of companies that are doing some layoffs right now. So maybe this come in higher or lower. I don't know, but of course that's going to be what moves us. Then we have the Philly Fed manufacturing index and new home sales, and nothing. We have pretty much a clean slate on Friday. So not a lot of news to consider for this week. We really just kind of need to pay attention to our headline news. So that's what we really want to watch out for. And with that being said, with all the war stuff being going on, so that's the biggest concern right now, and what's going on and how that's going to affect us. So we can go ahead and pull up the charts. Let's go ahead and get dollar up. Dollar we've been pushing higher on dollar. Dollar's been running high with the fact that usually when war happens, dollar gets stronger, and you can see that we kind of been pushing up for this last week, and then we were pushing up around the 25th of February, all into this. So this kind of following that same trait. If we do push down to the downside, there's a order block right here. See it better on a 4 hour. You probably see it better on a 2 hour chart. Looks like 2 hour is probably gonna be better. Yep, 2 hour chart, right? So if we do push down, there's a order block and then there's a fair value gap. Oh, hold on. Let me do something real quick. I got a new little thingy so y'all can follow me a little better. Okay. Does that help with this little pointer that I'm using?
Yeah, means easy to see. Yeah.
Okay. All
Yeah.
right. So yeah. All right. Cool. So all right, we got our fair value gap right here, order block right here, and then so we've opened up to the downside. How we're gonna deal with that is gonna be our question that we want to look out for. So if we sell off like we are, we get our 0 to 1 move, likely to hold here. If we don't, we go ahead and just push down and make that move all the way down. But we get a retracement for the 1 2 retracement that holds us around that fair value gap that we made. Then if we get a rejection, it should come around the daily at the 2 3 move should take out this low. If we do sell off, I didn't mark this, but I guess I will for so we don't miss out on this. No point in not marking that on here. So a little liquidity here. So if we do get the 2 3, it should take us through that low and maybe even below this low. But we should likely get a retracement there at the 3 for the 3 4. And if we get the 3 4 move to the upside, that's when we're gonna likely retest this order block area and this fair value gap area. And then if that holds, we sell off into this new week opening gap from last week that I'm assuming that we'll try to hold up at. So highest probability is I think we get a bounce at the 5, knowing we could get a bounce at the 3 or the 1, but I think high probability area is the 5 for the bounce. Then on the upside move, we have last week's high right here at risk. So, I'm thinking that we definitely try to come and take out this. There's another high from a week before, and we just took out some highs ahead of time. So I think that those two highs that we just had may equal highs, and I think that those will be a risk at some point of this week. Our 0 to 1 trades us into the daily order block. There's a smaller order block right around this 100 level, 109, 101 level. So that's why I'm thinking we get our rejection for the 1 2 retracement. And if we are going to push up higher, we're going to hold at or around the low of this daily order block and then try to use that as support to go ahead and push up for our 2 3 move, which that should take out our 1. And then after we take out our 1, our 3 should take out this previous day high. Then if we do get a rejection, this is right around the high of the order block, this previous day high. So if we do get a rejection, it may likely come at the 3. And if we don't continue to sell off, we hold at the low of the order block. And then we try to make our 4 or 5 move up higher. And that will again take out the 3 to push higher into this previous month high, likely. That's our next draw of liquidity. So go ahead and save this and we can drop this chart. Oops. I'm looking forward to trade this week. Um, last week and the couple weeks before have been a little off, so kind of looking forward to this week. Um, I'm gonna go ahead and start the Facebook post too. Yeah, let me go ahead and start this today, the 15th. Make sure I don't forget this like I did the other day. We will go ahead and edit it from here. Definitely, if you guys got any family or friends over there, make sure y'all checking on your people because it is not they are not doing a lot to try to get those guys up out of there and get them guys safety right now. So do what you can to keep them in good spirits over in the Middle East right now. We have goals sitting right now inside of this inverse fair value gap that has kind of been holding in for a little while, and it's been using this. You can see we're pushing to the downside right now. We got our 0 to 1 move that should take us down to this 4 hour fair value gap. And then we have this liquidity low here as well. Um, so we should get our 0 to 1 somewhere along this area. If we get a bounce, I'm expecting it to bounce, somewhere inside or near this fair value gap at for a 1-2 bounce. If we do get the bounce at the 1-2, I'd like to see us get a rejection to continue lower somewhere near the low of the inverted fair value gap. And we continue lower to take out the one and trade deeper into the 4 hour fair value gap. And maybe even taking out this low at the previous week low here. And then we could likely possibly get a bounce at that area or somewhere inside of the 4 hour fair value gap for a 3-4 bounce. And if we are going to start to move higher, this is probably where we get that move from on gold from around somewhere around this area from the 4 hour fair value gap down to the previous week low at some point. And then if we do make this low at the three and we fail to retrace and continue higher on the 3-4 move, the four rejects after we've inverted this 4 hour fair value gap, where we could see that the four happen around this area and it also could come back and try to tap into this inverted fair value gap. But then that takes us lower to take out the three. And then there's a 1 hour fair value gap that the five could likely be made at. And if we keep going lower, we also have a previous day low and a area of liquidity below that as well. Now, if we get the upside move, then that means we're going to hold inside of this 4 hour, this inverted fair value gap. And then that's going to take for the 0 1 move, take us above this little short term high. And then likely we take out these two equal highs over here that are actually a previous day high. And we get our one above that high. Our 1-2 retraces us back at, or there's a little fair value gap that's right here that would get inverted. And then we also have the high of the inverted fair value gap where we could get the two made at. Then if we get the 2-3 move, of course, we'll take out the one and re and clear these equal highs again. And then we'll clear those highs again. And then the three should push up somewhere near or around this old 4 hour fair value gap to the downside, right near the midpoint of that. Then we'll have another move where again this will be inverted. So our four should hold at or around somewhere near these highs. And if worst case scenario, we could come back down to high of the inverted fair value gap and get a bounce from there. And then aim for the three to get taken out. And our five should take out a previous week high if we want to go higher, where the 4 or 5 move could take out this previous week high or trade into this old new week opening gap. And if we do get a rejection, I'm thinking that the five will be the most probable area. The three or the five, with the three, with the five being the most high probability. So that is gold. This is gold. And I'm gonna drop this, go ahead and drop it in the group too. Save myself some time. We got VIX coming up next. Now, VIX has pushed to some extremes and then sold off at some extremes. So we had a huge gap on the opening last week where we gapped all the way up from and made this huge gap last week. We sold off through it and then we traded pretty much below it for the rest of the week, right? So we only got a couple days where we could see some big volume with Wednesday and Thursday being our biggest days. So if we are going to expect some huge volume shifts, it's going to likely be on the Wednesday with being the highest day of large volume trading. And then on Thursday would be the other day because we got the Fed rate and we got CPI, I mean PPI on Wednesday. But if we sell off on the 0 to 1 move, there is a fair value gap that may hold us up. And then we got the monthly. If we continue to go lower, our 1-2 holds out inside of this fair value gap right here, and we push lower to go through the monthly. And then there's another fair value gap. I didn't put it, I didn't want to, I don't want to keep, I want to keep this chart kind of clean, but there's another fair value gap and order block right here. So that's why I'm thinking we get our three. Then if we get a bounce, we push back above our monthly. Our monthly may hold us higher, so we could see a bounce from the 3-4 move. But if not, the 4-5 rejects near the monthly, and we sell off to take out this low and maybe even these equal lows over here. And worst case scenario, we get our bounce from the 5. I actually like the 3-4 move better for the bounce to the upside. If we do bounce to the upside, so highest probability is the 3. We could also see it at the 5. I like the 3 just because we be bouncing off of the monthly opening price. So we'll typically see a lot of support at the monthly opening. Then if we do push up to the upside, we got this previous day low here. That's going to be a target. And then there's a little small 1 hour order block that's up here. I think that if we take out this high, we push up into this 1 hour order block and we get our 101 rejection here. There's still a little small new day opening gap as here. Maybe we come back and try to use that as support for our 1-2 retracement and we hold around that low, which is also around this high. And there's the daily opening price. So all those could act as support. Then there's a small gap right here as well. So that's where we could see our 2-3 move. And our 2-3 move would push us above our one and then higher into this gap that we already had that we're trying to fill. If we do push up to the upside, then
Thank
there's
you.
also a daily order block that we have on the daily chart that we could see the 3
Have
get.
a great day.
What's up, cuz?
Oh, sorry. Thought I was on mute.
I'm gonna mute him. Okay. So that's where I'm seeing us get our 3 at the side of the daily order block. And let me make this a little bigger. Okay. So 3 at the daily order block, we get a retracement. The retracement pushes back somewhere near this 1 hour order block and also near the middle of this that 3 also happens at the middle of that gap that we had too. And if we make our 3-4 move to the downside, we could also retrace back into this gap, daily gap, new day opening gap that we got the high right around here. And that 4-5, that makes our 4-5, where we trade up above the order block, tap the old weekly high opening and weekly high, and we can see prices above 36. So highest probability we reject at the 3. Next highest is the 5. So that's where I would be looking for VIX. Anybody got any question on it?
I'm good.
Okay, let's get the chart. So that's VIX. We zooming through this today. Okay. We got to add one thing. We got a new day, new week opening gap. Our gap was on the open, not a huge one on Dow. Not a huge one on Dow, but still need to account for it. So the opening price was 46,406. Okay. All right. So we good. So right now, kind of a muted start, but we didn't get a huge gap. But you can see we are pushing up in the 0 to 1 right now. And our 0 to 1, we do gotta have a little fair value gap right here. So we could see something happen right there, but I think we still go ahead and take out this high, which is our previous day high, and we take out this high over here. There's also a little or a fair value gap in the order block over here. That leads us into this new week opening gap from last week, where I think that's where we get our one at if we do continue to push up. And once we get in his range, we'll have to see if it's going to sell off or continue. I like for a high probability rejection for this to be at the one. So on our 1-2 rejection, this may actually be the move to take us lower to set up the move to the downside. So to me, the highest probability is the one in this scenario, because we have this area that we already have sold off from before. And then if we hold to push higher than that on the 1-2 instead of selling off here, the 2-3 move takes us above the one, and then we got some trend line liquidity that's all through this area. So at that point, we likely get our three somewhere near this high. And if we get a rejection from here, you can expect the rejection to take us back into this new week opening gap from last week and hold anywhere in between the high, middle, or low. And then we could also see the sell-off happen from the three. But again, I like the one as being the highest probability. Uh, if we do get price to hold to go higher, for the 4 or 5 move, it happens somewhere near inside of this range. And then we see price push up, take out the three. And the main objective is, of course, to take out the previous week high and then come back to test the yearly opening price. That's the main objective. And then you can see up higher, we got the monthly as well. We got the yearly opening price, and then we also have new week opening gap from a couple weeks before. So that'll be what we look for the upside. Once we start to sell off, if we do, you can see that we took out the previous day low from Friday. The yearly low is here. So our yearly low is in sight for us to make a new yearly low. You can see even on this gap open that we almost made a new yearly low on the opening. So the low that we made today is 46,339. The low for the year so far is 46,333. So we only missed that by 6 points. So keep this low in mind, right? Because once we start taking this low out, that means we were making new lows for the year again. So that's going to be important. But our 0 1 takes us into this daily fair value gap. And that means that we've made a new yearly low and we would have taken out the previous month low. And if we do try to get a bounce, it'll probably happen around this daily fair value gap area where our 1-2 could take us back into our weekly opening gap that we just made. If that holds, we set our 1-2 high in that range and we sell off from there, right? Once we sell off from there, our 2-3 move takes out our one and we go deeper into this daily fair value gap. And we likely sell down into the midpoint or to the low. And this previous month low will be one of our main targets if we do sell off. Then our three is my area where I think we see a high probability rejection to flip price to go back to the upside. If you see the 3-4 happen, you may see some moves that some new fair value gap and new order blocks within this 2-3 move to the downside that get traded through and we push higher. So that will be my high probability area for us to look for. And if we do sell off at the 4 and we reject, I think that we just challenge the 3 and we set a shorter, a higher, a lower low, but we don't really get too much past the daily. I could be wrong on this, but I think our 3 is highest probability, and then maybe our 5 is the next. There's some other lows, which we can look at on the daily. So this is the low that I'm actually looking at our 5 to come to. We'll need to see. Let's see what the continuous chart looks like on YM. Yeah, so this is that low right here that I'm looking at the 5 to come down to. And then you can see here on the continuous chart, there's another low as well. But you can't really see it on our current contract. Um, oh, I take that back. You can see it right here. That's the low, other low. But let me just add that for you guys too. This is August. It's a weekly low. Okay, a lot better. And it makes more sense. Okay, so this 5 takes out that low. Okay. All right. That is YM. And now let's move on to NQ. NQ. You guys can hear me okay? You
Yeah.
guys can? Okay,
Mm,
cool.
mhm.
All right. NQ's coming up. And we got to add our opening gap, small open gap. And what's that opening price? 287.75. Okay. Make a minor adjustment. All right. So just like we had before, there is a little small fair value gap on the 1 hour. That's where our 0 to 1 takes us near at or near that low. We got our yearly low just below. So our 0 to 1 could take out that yearly low if we get that. But as you can see right now, we're pushing to the upside. We're coming into this little small fair value gap that I mentioned that's on also on Dow as well. And we got our new week opening gap from last week. So our 0 to 1 should push into that area. We could see it reject near this fair value gap or even near the monthly, but likely if we do or we don't, we actually should be taking out this high, maybe or at least come into the monthly to challenge the high or challenge the monthly again. And then if we do get the rejection, there's also a small little fair value gap here. There's an order block right here. There's a swing high at 3. If we do get our rejection at the 1 near this monthly or near this fair value gap or somewhere inside of here, the 1-2 retraces to try to hold inside of this weekly gap to go higher. We could also see sell off here at 1. I wouldn't be surprised if we did see a sell off near the monthly as well. So the 1 is a high probability area we could sell off from. But I'm liking to see if we get the whole price to hold at the 2 and make the 3. We take out 1. We take out this high over here. And then we set our 3 right above the high that we make here after we take out the high from 1. Our 3 could be the area that we get our sell off from. This is my highest probability. This consolidation over here may act as strong resistance, and we can see that price may sell off from here as the highest probability area. And then if we do sell off, our 4 could be holding us up at the old weekly opening gap and slash the monthly opening price right here, which is right around the high it is. So we could see that price holds here. And then this would be inverted, and that would also be a bullish area right around the middle. So, but if not, we get the sell off from 3 and we sell off to take out the lows that we made today and sell off even lower. If we push and hold higher at the 4, we aim to take out the 3, and then the next target will be this previous week high, and then somewhere around the yearly opening price is where I see price coming to. And if we do happen to sneak above the yearly opening price, you can see there's also a daily order block that's right above that too. So that may be where our draw on liquidity is to the upside. Then if we sell off, you see we'll have to deal with this 1 hour fair value gap and our weekly opening gap. And our 0 to 1 should take us at or near our new and current yearly low. If we get a bounce inside of this fair value gap and on the 1-2 retracement, we hold near the daily or this weekly opening gap, and then we likely sell off to take out the 1. And if we hadn't taken out this low already, that would also be another target. Then we have another daily opening gap that we could trade into. And then that's where I'm looking at our 3 get made around this daily opening gap or right around this previous day low. So our 3 holds us here for a 3-4 retracement, and then we come back in and we try to use this to sell off from for a rejection at 4, and we get our 4 or 5 rejection to take out the 3, to take out the yearly low, to take out the previous day low, and then maybe even take out this previous month low for the 4 or 5 move to the downside. So it could push us all the way down there. But if we don't, and our 3-4 gives us a move, a reversal to the upside, we would need to look out for price holding inside of this 1 hour fair value gap or inside of our weekly opening gap and see if price wants to hold above that. And then that could trigger our run to the back to the upside on that move. So that makes sense. Tracking.
Yeah. But, if I can means ask one question,
Mm-hmm.
just want to clear the concept. So, like for downside move, so it that is 0 to 1, right? So 0 to 1, if there that is a fair value gap, right? So it should reject this, means one should be inside this fair value gap, and uh, yeah, and it should be in between or C, and two should be little bit up.
It could be. Yeah. I just put where I think worst case scenario.
Okay.
Where like in reality, if
Mm-hmm.
this fair value gap is gonna hold, you'd
Mm-hmm.
actually want to see it hold in the one to be inside of there.
Yeah.
But knowing that the one, if it does happen, it
Mm-hmm.
could push through this
Mm-hmm.
and and it also could take out this low and it could take and it could actually hold at this as well. Because if we do get a strong sell-off,
Mm-hmm.
there's a possibility that it doesn't even use this at
Mm-hmm.
all. So that's kind of why I just did it like
Because
this.
that is so near, that's why.
Mm-hmm.
Mm-hmm.
Hmm. Yep.
Okay. Okay. Okay,
Yep.
because I made that move like 0 to 1 is in between that FVGC, and then it will means 1 to 2 is up above, yeah, till the new day opening gap.
You did this.
Yeah, and after that, yeah, this one, and
Yep.
this three should be in between this orange FVGC.
Yep.
Yeah, and
And you
I
pull
can
that
get
up here.
reversal from here also, and
Yep.
from one also, and
Yep.
if that is downside, then it will definitely come down. So I
Yeah.
made this kind of
Which is fine.
fine.
I I I have the same interpretation, but I'm just not drawing it. I just drew it different, but it's the same interpretation.
Okay.
Like the logic behind why I put it where I put it,
Mm-hmm.
it's not really the big part about it. It's just where you put it and understanding what's there and why if it gets down there, something should happen.
Right, right.
Like like I don't expect for this to be spot on, right? I don't
Mm-hmm.
expect for this to if it shoots overshoots it or undershoots it, I'm okay with that, right?
Mm-hmm.
But what I do want to see is if it gets down here, it could come all the way down here, but I think I want the majority of the price to be holding inside of that if I was looking
Right.
for a push to the upside.
Good. Right.
Or if it pushed down and took out this low right here,
Mm-hmm.
and then we got our 1, 2 to
Mm-hmm.
start from here,
Right.
then I just want to see that the price holds here, right? And then
Mm-hmm.
once it gets back up here, it's either going to hold inside of
Right.
this or it's going to hold inside of this.
Yeah, exactly.
That's all I'm expecting. Like, I'm
Mhm.
not expecting it to come precisely down to
Okay.
that particular level or anything like that.
Yeah, yeah, yeah.
It's just the flow of it is
Yeah.
just what I'm looking for.
Mm-hmm. Yeah, but this is
So,
really good to understand the move upside or downside.
hmm
Yeah.
hmm So, like, this was last week's opening right here, right?
Right, right.
And we already knew that
Mm-hmm.
we had a low right here. There was a low right here, and then there was a daily opening gap right here, right?
Mm-hmm.
So if we were going to do a projection, we would have, primarily been looking for our 0 to 1. This would have been our zero. This may have been our one to come down to the gap, right?
Right.
And then we try to get a bounce up for the
Mm-hmm.
1, 2 move, right?
Mm-hmm.
So this would have been like 0, 1,
Mm-hmm.
2. We never got a 3. We
Mm-hmm.
tried to get a 2, 3 move right here, right?
Mm-hmm.
And it didn't happen, right?
Right.
So in a case like that, it's just again, it's just like we not really worried about all right, does it perfectly come down to this
Mm,
gap or this gap? But if it does come down there, we know, all right, cool. It's a possibility that we get a rejection from
mm,
near this range, which it overshot it.
mm,
But if you understanding the concept of what's supposed to be happening, you can say, hey, a 1-2 should happen here.
mm-hmm,
Now, did we expect the reversal? No,
mm-hmm, mm-hmm,
but that should happen. And then just like if we were looking at the 0 to 1 to the upside, right? We
mm-hmm.
know that once price pushes to the upside, this should be a target,
Yeah.
and we should likely get the high made right here, which is what happened right here.
Mm-hmm, yeah.
So if this is our 0 to 1 right here, we
Mm-hmm,
got a high right here near where we should expect it at. Then this is a 1-2 retracement to the downside, right?
yeah.
Where we're expecting price to come back into this candle right here,
Mm-hmm.
or now that we got a fair value gap,
That new favorite. Yeah.
that's a new fair value gap, which
Mm-hmm,
that could be used to take us higher, right?
mm-hmm,
This wick touches this wick, right?
mm-hmm.
And
In
we
this
got,
case, you don't expect to come till this IFVG, right? Because there is big FVG. Means I'm just asking, like sometime we wait for entry for come till that IFVG, but it just that FVG and go up, right?
yeah, I mean, this is just this is after our price, so
Mm-hmm.
we probably would have never taken that anyway.
No, just I'm asking like for
Yeah, yeah, yeah. I
scenario.
mean, you could come down in here,
Mm.
you could, but in this case, it didn't.
Yeah.
But again, this is our one retrace, our one, that's our two. Our two,
Yes.
three move, right?
Mm-hmm.
Our 2, 3 is this low. We take out one.
Mm-hmm.
Our three take out, this would have probably been a three right here
Yeah.
at this high right here, right?
Mm-hmm.
Then, once we take out that, actually, it probably would have been our three probably would have been one of these highs up here, right? But let's say we don't get it, right?
Mm-hmm.
Let's say we say this is our one, this is our two, this is our three. We
Yeah.
probably not really saying this is our four, but if we did, that would be a four right there. This
Mm-hmm.
would be a five. And now we starting over.
Yeah.
And now we just sideways, right?
Mm-hmm. Yeah.
But now, okay, we get this high. Let's say that our close on this day is our Wednesday. So this is Wednesday. Based off of when we hold our sessions, this is would have been like, okay, our 0 to 1, our zero starts here, our one comes down to the monthly, and we also have this fair value gap. So that's where you should expect the 0 to 1.
Mm-hmm.
So Monday, I mean, if we had did our session on Wednesday, it would have looked like this, where we would have had our 0 to 1 come down here, and we would have been thinking that we got an order block right here,
Mm-hmm.
we got a fair value gap right here,
Mm-hmm.
we got the monthly opening price right here. So that's where we should get our first bounce, right?
Yeah.
Then there's a fair value gap on this candle. You can't see it right now, but so we would have been thinking that, hey, we got a fair value gap right here and an order block right here. So if we get a 1-2 retracement, it should sell off right here, right?
Yeah.
Then once we sell off around here, we should take out the one. We should take out this low right here.
Mm-hmm.
And then likely, worst case scenario, we hold at the bottom of the new week opening gap.
Mm-hmm. Yeah.
And then we're saying at this point, okay, we're expecting our 3-4 to happen. And where is our 3-4 going to happen? There's a fair value gap right here. There's weekly opening price, I mean, monthly opening price here. And then this is now inverted, this fair value gap. So
Mm-hmm.
now our 3-4 should happen somewhere along here, right?
Yeah.
If we're going to push to the upside, this is where it's going to happen, right?
Mm-hmm.
But instead, we go 4 or 5, right? Our 4 or 5 should take out the low we made right here.
Yeah.
There's a low right here,
Mm-hmm.
and then there's this fair value gap. Or we even have this low we just made. So worst case, we would be likely saying that our 5 happens right here
Mm-hmm. Yeah.
at the gap. So that's kind of where, but even when even if we were to do this, right,
Mm-hmm.
and we making our projections, you can see at the 3 that our projection would have said that we would have made the low near the new week opening gap low, right?
Mm-hmm.
But you can actually see the low is here.
Yeah.
So it's
That
not
that four.
precise, but it's still
Yeah.
the concept, right?
Yeah.
It's not spot on, right?
Yeah.
Because
Mm-hmm.
even though we would have been saying that the low would have been at this 24,500 area, which it tried to make the low right there, and you know that because the wick on this candle
Mm-hmm.
is 24.491, which is 10 points away from the 24,500 price point. And
Yeah.
then it just made another low, and then it finally moved up to where we would have projected the 4 to happen.
Mm-hmm. Yeah.
And just like we say, okay, on the 2 3, on the 1 2, there should be a fair value gap inside of that. That's where we should expect to get our high, which is in this case, our 4 is our high, which made our high right around this bearish fair value gap,
Yeah.
which also is near the opening monthly opening price, which
Yeah.
is also near an inverted fair value gap that we also got.
Yeah.
So if
That
we
is like
consider all of
one.
those together is what you're trying to do.
Exactly.
You kind of had the same situation up here
Mm-hmm.
where you had inverted fair value gap right here. Extend that out. You had fair value gap right here. Right?
Mm-hmm.
And you also had a little small order block right here. But in this case, 0 to 1, we come down into this. This is still bullish right now. Still bullish at this point
Mm-hmm.
once we come into it, right?
Yeah.
But now we're pushing up into
Yeah.
the high, and the high has a bearish fair value gap, and it
Yeah.
sells off right around
Yeah.
here.
Mm-hmm. Yeah.
First thing we do, we take out this low, we
Mm-hmm.
take out that low, we set a new low. We don't get a new higher low, but instead we make another lower low. So that's now it's like, okay, cool. We've established that this is not bullish anymore.
Mm-hmm.
This is inverted. That's inverted. This still bearish, right?
Mm, yeah.
So now we set a low here. That's where we thought it would come. It
Mm-hmm.
goes a little further, right? So if
Yeah.
we were going to look for a bounce, that's where this is basically describing how I think about like, hey, if we're going to get a bounce, the highest probability would have been 3, right?
Mm-hmm. Yeah.
That would have been us saying that, like, okay, cool, it should start over in a different direction and we get our reversal from there, right?
Mm-hmm.
That's would have been a high probability area, right? At the 3, right?
Yeah.
But if we don't get this at the 3, right, we
Mm-hmm.
should either come into this fair value gap, this monthly opening price, or the range of this
Right.
inverted fair value gap to sell off from there.
Yeah.
Worst case scenario, we also come into the fair value gap that we already used. And then we should get our 4 here. And if we get our 4 here, our 4 should take out our 3, which is here, but this is actually the 3, even
Yeah.
though we made a lower low. This is actually 3. We only projected it to come down here. This is actually our 3. So our 4 should take out the 3, right?
Yeah.
Once we take out the 3, our 5 should be at or near this range right
Yeah.
here.
Mm-hmm.
And that's exactly what ended up happening. So if we, even though we didn't get on the session, this is exactly what I would have put on there anyway.
Mm-hmm.
This is exactly right. So just like we just went through that exercise, right? It's the same thing we doing today,
Yeah.
right?
Yeah.
So today we are taking the same approach, right? We
Mm-hmm.
know that if we get a 0 to 1, it should come at or around this area. Worst case scenario, we come down here, right?
Yeah.
If we do come down here or hold right here, then the 1 2 should push back up into the weekly opening gap, or it could even worst case scenario, it comes back up to this gap right here from last week.
Mm-hmm.
So when we get our 1 2, it could do anything, it could reject inside of here. If we sold off below this on the 1 2, on the 0 1, if we sold off below this range and we didn't hold and we came down here, our 1 2 could come to here and sell off, here and sell off, or even here and sell off, right? But I want to see it happen around the gap, right?
Mm-hmm.
Since we already seen that this could get used, right?
Yeah.
Then, if we do not continue to go higher on the 1 2 move, then our 2 3 rejects here or here, and then it goes lower. We take out 1, we take out the yearly low if we hadn't taken it out already, and
Mm-hmm.
then our 2 3 low is at or around the yearly low that we just made or this new day opening gap. Worst
Right.
case scenario, we go ahead and take out this previous day low, right?
Right.
Then this is where I'm thinking highest probability is we get our move to the upside from here. So if we get our move to the upside, our 3 4 move should come into back into this fair value gap, which means this will be inverted at this point, right? That means that it's not bullish anymore and it could be
Mm-hmm.
selling right here.
Yeah.
So that's why I'm looking for the 4 here. And worst case scenario, we also come back into the daily
Mm-hmm.
opening price and the weekly opening gap. That's
Mm-hmm.
also an option. And then
Yeah.
there should also be a fair value gap to the downside inside of the 2 3 move that overlaps this as well, right?
Yeah.
So if we're gonna sell off, that's where I'm looking at it, right? But if not, our 4 5 move happens and we take out the 3, we take out this previous day low if we haven't, and then our 5 takes us at or near this below this monthly low.
Mm-hmm.
Make sense?
Yeah. 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 Definitely.
For the new for IG and cars, that makes sense for y'all because y'all the newest guys.
Yeah, that made plenty of sense, bro.
Okay. All right. So let's put NAS on the chart. Let's drop NAS. And then last chart is S&P, MES. Same concept, right? We're already kind of pushing to the upside. We gap to the downside and we're holding a gap for now. So we'll come back and talk about the downside. So the upside is we do have fair value gap. We have the old weekly opening gap from last week, right? So that's going to be our first area that we got to deal with. Where if we do push to the upside, we will need to see that price can get through this fair value gap to the downside and then get above this new week opening gap from last week. And then we take out the high from Friday, right? Expecting for the one to be at or above this high and maybe even this high. There's also a fair value gap here. So we'll need to look out for that as well. So I'm expecting that to give us our one at or around anywhere. Our one could happen anywhere between this fair value gap and this high, this swing high right here. Then our 1-2 retracement, if we're going to hold, we get, I actually like one being an area that we could see price sell off from. So I like the probability of us getting a sell off from the one or the three on in this case. But if we don't, our 1-2 holes inside of this weekly opening gap, and we get our 2-3 inside or this fair value gap or somewhere near the new week opening gap from last week from the low, and then we move higher to take out the one. If the one hadn't taken out this liquidity here, we take that out, and then our three pushes us at or near the monthly opening price, which is also near new week opening gap from the week before last, and we get our high near the low of that gap, which is takes us at 68.29 area. This is the second area I would look for major rejection from because we got the low of the gap, we got the monthly opening price, and we would have already taken liquidity from these areas over here. So once we take liquidity, that means we can, in most cases, start the next move to the opposite direction. So if we do come down and get a rejection from here, our 3-4 move takes us back into this gap. And if we still sell off, it'll happen around here. If we hold somewhere inside of the gap for a four and we get our 4-5 move, it takes out the three. We trade above the monthly opening price, and we should start seeing price hold inside of this gap to go higher. And we likely trade near or at the yearly opening price. And that's where I'm looking at as to get another rejection from. So if we do push up higher, the five rejects right around or near the yearly opening price. But the highest probability is the one or the three right for now. Then our downside move, if we push to the downside, it's going to happen at the three or the one. But if we do kind of stall out inside of this and we go sideways, then you can look at the 0-1 to the downside, where our first area of interest will be us taking out this yearly low. And then this previous month, there's some equal lows on the previous month that we would be taking out. And then we trade into, we got a lot of overlap right here. We got the yearly low, previous month equal lows, daily fair value gap, weekly order block, right?
Yeah.
So it's a lot going on in this range, a lot of area where we could see some support. And then there's a price gap right here on the daily too. This is just so happened to be right around the middle of this weekly order block. So 0-1 holds at or near the weekly order block slash daily fair value gap. We push up for the 1-2. Our 1-2 takes us at or above um, the daily opening price into the weekly opening gap. And we should reject somewhere around that if it's going to stay bearish. Our 2-3 takes our one out, and we trade deeper into the daily fair value gap, deeper into the weekly order block. And the three either bounces here or we take out the previous week low, right?
Yeah.
Our 3-4, which means that we've traded into and deeper into the weekly fair order block and the daily fair value gap. we get our bounce from here. If we bounce and we start to see that we could get, start reversing, that means we probably traded through the low and back into this this daily fair value gap, and we're starting to hold and go higher from there, right? Worst case though is we push up on the 3-4 and we reject inside of here. Again, there should be a fair value gap. We could even come into this weekly opening gap and reject on the 4 from there as well. And then we get our 4-5 move. Our 4-5 would take us through 3, through the previous week low if we haven't done so, and then into this price gap right here from the daily, which is in the middle of the weekly order block. So, and then if we kind of look at what the daily looks like, which I should have started with actually, you can see with our draw, we got these equal lows at this point. One low, two low, this 3 low right here. Then we got a fair value gap. That's that daily fair value gap right there. The weekly order block is right around here. But there's one here, but the one I'm referring to is right around here. So that would have us coming back down into this order block. Then the price gap that's right around the middle of the order block is right here. So that's what I'm referring to. So, and at that point, if we come down to the middle of that order block, you can see not only will we come back in the middle of the order block, but we would have came into this fair value gap, middle of the order block, price gap, and we would have taken these lows out. So that would be a lot for us to come to. Now, from a bullish perspective, if we were going to be pushing up, you can see on the daily, this area right here is a um a little small fair value gap on the daily. Then we got this price gap on the daily, where this would probably be the level of where we would likely see price come back into. Even on the weekly chart, you can see gap right here. If from a weekly's perspective, like if we were to come back in here, that wouldn't be a surprise. But then once we got in here, we would likely have to look for some kind of rejection. Monthly, we would need if monthly starts to go bullish, we coming in here for sure. We coming in this range. So, but if we stay bearish, we take out these lows, the low we just made, and then this low, and then we start to trade lower on the monthly. We got this monthly fair value gap. Look at the weekly. There's that weekly fair value gap right here. There's that another lower range too. If we do continue to go lower, if we were to continue to go lower after we got this weekly fair value gap, weekly order block, this is another area we would need to look at if we got below that or once we got near or at that price range, because that'll be another area we look out for. So we kind of would break out of this big range. Another thing I wanted to kind of bring to y'all attention to before I get off, but from the highs we made, the all-time high, we are down 10% on NQ. We're down on down 6.5% on ES. Let me drop this chart right quick. So just keep that in mind. We're down 6.5% from the all-time high already on ES. This is S&P. They haven't really talked about this in the news yet, but just keep that in mind, right? So that's S&P down 6.53%, right? Since the all-time high. I'm going to go to the daily. The last
S&P
all,
you put that in Facebook, right?
huh?
S&P chart, you put that on as okay, good.
Yeah, I put it in there.
Mhm.
Our last all-time high on NQ, where our last low was, we're down 9.98%. So basically, we're down 10%. Then, so we're pretty 6.53 on ES, 9.98 on NQ, and then on Dow, should be 10% already. Not quite. So Dow actually made a new low. Dow is down 8.45%. So from our last all-time highs, we're actually nearing a 10% correction. Um, Keep that in mind because they are not talking about this in the news yet, and at least from what I've heard and seen, but just understand 10% is a number we want to look out for because once we start getting below that, 20% is bearish market terms, and we start talking about like recessionary talks and stuff like that. Um, if the war keeps going on, 20 to 30% correction is a possibility, right? So I just want y'all to keep that in mind, especially knowing um, that we're going into this to Q2 and Q3 in the summer, where gas is going to automatically go up anyway. Gas prices are first sign of inflation increasing when it costs a lot to make, to ship, and when it costs a lot to transport. Usually that makes inflation go up higher. That's usually when we're going to see some type of response from the market, going pushing further down. So keep that in mind. Put this in your notes and just watch that for the remainder of for this week and the remainder of the following next couple weeks. Okay.
So how much you expecting for S&P? 10%?
Well, right now it's at
6.3.
6.53%, which means that we're only like 3.5% off from 10% correction.
Mm.
Dow was at 8.45% and NAS was at 9.98%.
98%. Yeah.
So it's already at a 10% pretty much. So keep that in mind as we go into the rest of the week.
Mhm. I was
And
listening news, so there was something like now means everything expected to go 20% low. Do you have any idea about that?
yeah, that's kind of in line with what I didn't see that, but um that is actually in line with what I was just talking about. Yep,
Yeah.
yep. So
Mm.
um and I was actually listening to Earn Your Leisure too. They were
Mhm.
talking about the same thing
Mhm.
on their channel too, but you know, they're not, a lot of people haven't like referenced the fact that we're already in a position where we're 10% off the highs already for
Mhm.
on ES, and pretty much on, I mean not on ES but on NAS and on Dow pretty much already, you know,
Mhm. Mhm.
with no good news in sight, right? You know, so that's, we're already down 9.98 and 8.45 on
Yeah.
Dow and in Q, and we don't have any good news in sight. So
Mm-hmm.
with that being said, knowing that we already getting gas price increases, that's gonna trickle down to other goods, services, and products. That's gonna increase. So likely earning numbers won't come in, beating with good guidance, and then it starts to pour over into what the earnings outlook will be. And then we start missing earnings and then we start going lower on the stock market. So that's
Mm-hmm.
kind of what that cycle would look like. And we already going into seasonality anyway, because April, March time frame, we usually get a sell-off anyway. And
Right.
this is kind of where we are right now, you know.
Yeah, that one, yeah, they were saying like a midterm election year, so
Yep,
20% tend to fall.
yep. That's also another aspect too.
Mm-hmm.
So, we got a lot of reasons why this could get worse. We got a lot more reasons why this could get worse than we have reasons that this could get better. So
Mm-hmm.
not to push a bearish bias, but you know, take it in a neutral standpoint, but
Mm-hmm.
understand like, we are going into a time of the year where, selling
Mm-hmm.
is and repricing lower for people to dip buy for the rest of the year is happening right now. So,
Right. Okay.
so cool.
Mm-hmm.
Cool, cool, cool. Anybody got any questions? Nobody?
Yeah, one more thing, uh, in trading view, we make the template, right? So can we
Hmm.
make template in groups, two, three, like breaker, right? So we are looking for one break of structure, FVG, IFVG. So I can make that means group template. Can I do that?
I don't really use templates to be honest. You talking about indicator templates?
No, no, no. As you saved all these things in template, right?
Uh-huh.
Like this Elliott waves, right? Or this fib. You have
Uh-huh.
that all these are in templates, right? Previous
Yeah, yeah,
new week opening gap low. So I'm
yep.
asking, I can make that single, like a trend line or a wave or fib or anything, right? But can we do in grouping, like as you have this fib plus trend line plus Elliott waves and make that group, and then we can save that in template. Can we do that?
Like these?
No, no. Uh,
I
like,
think she's trying to say, and I kept correct me if I'm wrong. If it's like
mhm.
a fair value gap or order block, I think you just gonna have to name it that when you see it. Because I don't know of another way, but I
Yeah, I
think that's
don't
what you're
know.
asking, right, Anna?
Yeah, means I know fib. You are drawing that fib, and you can make that template. So fib is single thing, right? So if
Uh-huh.
you want to combine this with like we are looking for breaker, right? So in breaker we are looking for one order block, one FVG for entry, right? So if we can select that F break order block and that FVG and make one breaker template.
I see what you're saying. So,
Mhm.
like, if I'm always looking for something like this,
Yes,
IFVG, hold on. If I'm always looking for IFVG
right.
and I'm looking for fair value gap,
Yeah.
you saying like I want to keep these two as it
Yeah.
is.
So press means with control, select both and make that template. Yeah, exactly.
Like this.
Yeah.
Yeah, I have never tried that before.
Yeah, me too. So I thought if I can do that.
It looks like you
It
can.
looks, yeah.
No, I
Mm.
don't think you can. But
So,
I mean, I don't know if I necessarily would do it anyway.
mm-hmm. Yeah,
just because
this
it's
came in my
always,
mind. I
yeah,
was doing something, so I thought if I can do that, then it will be always be there. And whenever I want to see that setup, I'll just put that. And exactly, I'll wait for just to come for entry only.
nah, nah. I mean, maybe I just haven't tried it before.
Mm-hmm.
And I wouldn't probably do it no way because how you know where it's gonna lock to, you know,
Mm-hmm. Mm-hmm.
and you would be drawing both of the drawings at one time. So I don't know, you know.
Mm-hmm.
But there is an indicator that can draw it all out for you though. I think one of these, it's one of these people always use it. ICT, I think it's this one. ICT everything.
ICT, everything.
I think so.
I don't know. I don't. I means mm, why I can't use it, that indicator means
Yeah.
I means I can't trust.
Yeah, I don't trust it. Yeah.
Yeah,
I
so like
mean,
I want to see everything. Means I don't want
yeah,
to do
I
that.
just don't trust it. Yeah.
Mhm.
So I don't know how it's getting it, what it's using to calculate it and like, but I do know people who use it. I
Mhm.
just don't like I don't even like see it getting drawn right now. Like, where is it? It's supposed to have stuff on there at this point. Um, let's see. So, okay. Okay, so let's just say sessions, vertical lines, opening prices, float, standard deviation. I don't know what any of these are. Nope. Yeah. Like this one's supposed to be really good,
Mhm.
but I don't see where I would use it. Um, oh, maybe because I don't have it shaded. Let's just go here. Nothing still. Yeah, I don't see anything. There's another one too. Um, Order block finder. I think this one's one too. So
We have used that, right? You were using that and told me like this is not exactly working, right? Means
nah,
sometimes this is missing some order blocks.
yeah, it's missing some.
Yeah.
So yeah, that's why I didn't really like this one.
Mm-hmm.
Um, yeah, I don't trust this one either. So yeah, that's kind of what. But I know people using it though.
Mm-hmm.
I think Wale use it all the time. I don't know for a fact, but I think he used it. And then there's one other one too. I don't know. I don't have it on my list. Um, I can't remember the name of it though. But yeah, I don't really know of a better one than
Mm-hmm.
those. But there's one that'll draw the order blocks for you, the fair value gaps and stuff like that. But I don't remember the name of it.
Mm-hmm.
But I did notice though, and I think I sent it to you guys. There was one thing I did notice where you can use the orders to create your let me show you guys. Saw this over the weekend. Let me switch screen. Okay. There's two indicators that I saw like a couple of times, and I seen this on Kyle or Jade Capital. where this will show me the 4 hour candles on my chart. And a lot of times, one strategy that I use is the 415, where I want to know where the last three candles, the London pre-market and the 10 a.m. candle. You
I
can
have
tell.
seen this also. Sometimes
Yeah,
PT trades use this
yeah.
to do that light trading kind of thing. So
Hmm.
recently I got that, but I didn't try that. But
Yeah,
yeah, I was thinking because I thought when I see his videos, I thought he's doing something in PowerPoint. But
nah.
recently I got to know this is indicator.
Hmm.
That's why it's going like that.
Yeah. This I'm leaving on this chart just to kind of always know what's going on with the higher
Yeah, this is
time
good.
frame.
Mm-hmm.
Um, this indicator is called ICT higher time frame is this one right here. This one right here. The author is this person, and it's got about 14,000 likes. And then the settings, I just got the 4 hour, and I only want the three candles. Um, you can do more. So like if I do four, it'll actually draw a fair value gap if there's one as well. So that's something to look out for too. But I only want to know the three because I'm only looking for the 2 a.m., 6 a.m., and 10 a.m. candles. Um, so that's why I only got three. But you can see that, hey, it drew this fair value gap. Um, and if you get on the default, it comes, if I were to put this freshly on the chart, it's gonna be like 20 candles or 10 candles or something like that. But
Yeah.
I don't want all those. I just want these three. So in the morning when I'm trading New York session, I got the 2 a.m., 6 a.m., and 10 a.m. candles, and I'm seeing how that flow is going. And then I updated the padding just to give it some room from this candle over is 35 candles. So that's where that padding comes in. And then I just changed the color a little bit. Um, and that's pretty much all I did on that. So the other thing I wanted to show you guys is if you are
So,
if you're
so in your added only three candle like one block three candle, right?
mhm,
In my this is 4 hour, 1 day and weekly.
yeah, I just unchecked it.
Okay, okay.
Yeah, these I only checked I unchecked all of them except for the 4 hour.
Mm-hmm. Okay.
And then I just set this to three candles right
Mm-hmm.
here. And
Mm-hmm.
then I updated the pattern to
Okay.
35 and I changed the colors too.
Mm-hmm. Okay.
So that's all that I did. And then that's what I set as my default on there.
Mm.
So that way I always know what's going on with the 4 hour.
Yeah,
Um,
this is good actually.
um, the other thing was this I sent this to you guys too in our chat, right? So let's say this was the trade I was looking for right here, sell from here, and then the stop loss here and my target here, right? If I right click on this and then create a limit order, it will set the limit order up for me. So you saw how when I already got the stop loss set and I already got the target set. All I need to do at this point is just go in and put the orders, the amount of contracts I want to put in, and then hit sell. And I'll show you that again.
Yeah, repeat that.
Yeah. So let's say I'm getting ready to set up my trade, right?
Mm-hmm.
And I want to sell this fair value gap, right?
Yeah.
I know I want to sell around the middle. I want my stop loss to be the high, and then I want my overall target to be the low, right? I right click on the order and then I create a limit order. This will automatically set up my stop loss, my entry price, and my take profit. And then all I got to go is I want to use 5 contracts and then I can hit sell and my order is in.
And broker is by default your trader weight, right?
Yeah, I just pick my broker. I don't think the broker matter.
Okay. Means because I am not connected with the broker, so it's asking me right now.
Yeah, you got to have the broker connected
Okay. Mhm.
already. So this is just like once you got your broker connected already, and if I was gonna do like let's say that I wanted to buy above here, my stop loss was gonna be here, my target here. This is gonna be a stop order, right? So I'm gonna right click this, create my limit order. This is actually gonna be a stop order. I just gotta change it, but now, again, it's got my stop loss, my buy order, and then my take profit up here.
Yeah.
And then all I need to do is just um, set my contract size,
Mm-hmm.
and it's ready to go, you know.
Mm.
So that kind of help you speed up putting in your
Yeah.
limit orders, you know. That'll help you
Or
put it.
what's the difference between the stop limit and the limit order?
A stop means that you're trying to buy above or below the current price, right? So price is here. If I want to buy and I want my order to go in once it gets here, that means I have to have a stop order in. That means price is, if I'm buying, price is below me currently. So that means that price needs to already be running that way. And in reality, what it means that any price from above this and beyond, I can get filled at, right? The
Okay.
limit order is saying that if price comes down or pushes up to that price, I only want to buy at that particular price. So like as think of it as a limit as a specific price point. Like I want to buy it at this specific price point, right?
Mhm.
And you can only put in a limit in a buy situation if price is already above you, right?
Right.
If I'm looking at price and it's above me and I want to put in a buy limit, it has to go below current price, right?
Okay.
And that means that in order for that entry to get triggered, price would have to come back down
Back
to the
down. Right.
limit price and then pull you into the trade. And it's only
Okay.
going to pull you in at that given price. A stop order
Okay.
says that I am in a buy situation. A stop order says this order is being placed above the current price. That means that price is trading lower. In order for me to get pulled in, I have to see that price is pushing up again, right?
Mhm.
And price the stop order says that once price gets to this point, I need you to pull me into the trade. It doesn't guarantee that you'll get pulled in at that particular price, but once it triggers, it's going to start to try to pull you in at any given price after that. And
Okay.
it's going to usually typically be within the, one or two ticks, but that's when it's going to start try to pull you in. It doesn't
Mhm.
guarantee your price. A limit guarantees your price in most cases,
Right.
but a stop
I
just
got
says a limit guarantees your entry price. A stop guarantees that you get in the trade, but it doesn't
you. Right.
guarantee the price. And
Price
a
entry.
market order says just pull me in whatever price you can get me in at right now.
Mm.
And those are your
Okay.
three orders, right? Your stop is The best way to understand it is kind of the way I just described it. Market order says, pull me in any price right now, right? It doesn't guarantee a price. It doesn't really guarantee you get pulled in either, because if price moving too fast, then you might not get pulled in, right?
Mm.
A stop order says, I will guarantee you get in to price above or below whatever the price is that you put your stop order in. Your limit price says, I can guarantee you that you get in at this particular price as long as price comes back to that price.
Yeah. Right, right. Okay.
That's exactly the three type of orders, right?
All right.
So you just gotta make sure, okay, once I'm in here, right? Say I'm gonna put in a limit order, right? My limit order here, and see, it's already telling you right now that one, the symbol is got to be at least a one, but I can't put a limit order in right here. So if I try to put this in, it should cancel that. Which, oops, I didn't mean to do that. You see what just happened? Like I didn't actually
Uh,
mean to do that. Instead of it putting me in my order here, which should have been a limit order, that limit order should have been actually a stop order, right? But in this case, it just pulled me in at current market price because I guess it's saying, all right, okay, you're gonna put the order in, but your limit order can't go right here. So we just gonna market execute you in. So I don't. That's good to know that that happens, right? That's a good thing to know. So let me get out of this trade. Let me see. I want at least $1. Let's see if I can get $1 off of it. I want $1. I didn't mean to put this in, but I'm gonna try to at least get $1 out of this, you know.
I feel
When it
you.
was a plus, then I wanted to say, just stop this.
Yeah, I did. I meant to, but it's all good.
Yeah.
We gonna see if we gonna get $1. Uh, huh. And then you can see my order right here. It went in. This actually, I didn't know that it would happen like that, but this should have been a stop order, right? So when I put it in, so let me see if it'll let me how to do it. So now in this case, this should have been a stop order. And then you set your contract size and all that stuff. So this, if I actually wanted to get into this trade, I would have been putting in a stop order here. There go my dollar. Let's close that out. Okay, so like I said, it would have been right click, set my limit order, and it just says create limit order, which it probably is worded wrong. We're gonna go over here, set our contract size. Now that we know we below price, we need a stop order. So this limit order need to be changed to a stop order. And then we would go ahead and place buy on that. And then that would get us into the trade. Got it?
Yeah, I got you.
If it was in the opposite, right, we would be saying, okay, we want to sell, right? I want to sell below here, right? And I'm gonna use this as my stop loss. And then this is my target, right? So now this is my order, right? And in this case, it's going to say create limit order, right? My limit order goes here, but I can't put a limit order right here because in order for me to put it on a limit order on a sell, that means that I need to be selling from up here to get a limit order. So I would have to change this to a stop and then set my target, right? So this would be how that would look. I could mark it
Oh, okay.
execute in. I could definitely mark it execute. And in that case, that still says, hey, I'm market executing here. It's already got my stop loss actually still from when we set it up on the sale limit, right? Because this is my stop loss. This is the same stop loss and take profit. So if I was to market execute, it's going to use them same stop loss and take profit from here. because now it's already set up. So, you know, so that's a cool little trick that I saw over the weekend. That I will definitely be using that. Um, I'll definitely be using that. So yeah. So anybody got anything else? If not, I will catch y'all during the week. And if I see anything, I will drop it in the chat, and I'll holler at y'all. I'll try to get the video up as soon as possible. And ping me if you need me. Peace out.
All right. All right. Holler
All
at
right, bro.
everybody. Have a
All
good
right,
one.
Joe.
Later.
Like,
Good night.